Amid all the doom and gloom this week, up popped an upbeat Reserve Bank Governor, Glenn Stevens. And wherever there's an upbeat RBA Governor, higher interest rates can't be far behind. I spoke to JP Morgan's chief economist, Stephen Walters, who reckons the next rate rise is about 6 weeks away. Well, Stephen, we seem to have somewhat of a paradox at the moment. There's plenty of doom and gloom about, anecdotally, and some soft data recently. But as you pointed out in a note to clients this week, the Reserve Bank Governor, Glenn Stevens, was very clear that interest rates are going up because of nearly full employment, record terms of trade and so on. So I wonder if this paradox is simply explained by the term two-speed economy.
Well, yes, it's a good point, Alan. I think that's exactly what it is. And in fact, the Governor used that exact term, two-speed economy. I prefer multi-speed, to be honest, because I think there's many more than two speeds. And yes, of course, the commodity prices are booming and the mining sector investment pipeline's huge. But as you say, there's a lot of doom and gloom elsewhere. And in fact, I can't remember a time when there's been such a big disconnect between the Governor of the Reserve Bank is saying and what, say, retailers are saying, or tourism operators, or even the manufacturing industry are saying, that they're saying they're in real trouble, and the currency at above parity on the US dollar is really hurting. And yet we've got the Governor of the Reserve Bank talking a very, very upbeat story, and even indicating that interest rates probably have to go up.
Yeah, well, I suppose the fact that unemployment has fallen from above 5% to below 5% over the past 7 months, yet interest rates have been left on hold for that whole time, that speaks loudly in itself, doesn't it?
Well, it does. So this has not been an aggressive tightening cycle. Probably the first stage of the cycle, from when interest rates went up from a record low of 3% to 4 3/4, that seemed pretty aggressive. But as you say, they've been on hold for 7 months now. So interest rates aren't high. They're actually below average. And admittedly, mortgage rates are slightly above average, but we still have very, very stimulatory policy here, not only from the monetary side, but from the government side, with a very big budget deficit that they're running right now. So policy's not tight.
So when do you think rates will go up?
Well, we've been thinking August is probably the likely month for the next rate hike, and admittedly, picking the month out of any particular array of months is pretty difficult, but I think the Governor gave a pretty big clue this week when he said that he probably wants to wait and see that round of data at the end of July. And I think the key there is it does mean it's the second quarter CPI result. And then I think they'll do the same thing later in the year, wait for the next CPI print at the end of October and then hike again in November. So I think we better brace ourselves for interest rates going up more than once, even though, as you say, we've got all this doom and gloom out there from the retailers and the tourism operators.
So do you think that parts of the economy are actually in recession?
I think parts of the economy certainly are in recession. I think, like Queensland, for example, there's big parts of Queensland in recession, but clearly other bits of the economy, like WA, are booming. I think there's parts of the manufacturing industry probably in recession, but again, the Governor made the point very clearly this week that the Reserve Bank sets policy on the average. And okay, you've got a big variation around that average. You're right, it's going to inflict some pain in some parts of the economy that are already struggling, but unfortunately that's the price to be paid for the mining boom and the commodity price boom that's really boosting other parts of the economy.
Thanks for joining us, Stephen.
Thanks, Alan.